Now, I don't have a fancy Lambo because I like to invest in things that appreciate, but I did do 500K, and I'm 23 years old, and I'm going to show you how to do it step by step so you can do the same. Okay, and I did it all using a tool that I like to call a machine. All right, and in this video, I'm going to explain to you what a machine is, how to use it, how to create one, and how to basically use it as a money printer, so you can leverage your time and money, and you can travel the world, do a bunch of cool stuff, kind of what I've been doing the past year. So, what is a machine? How do you get one? And how does it end up making you money? So, my machine, just to give you some examples here, is trading. Now, I'm not saying that you have to be a trader. I'm not saying that you're going to copy my trades. It's not at all what I want you to do. But I am just going to show you the formula I use to make money with trading, that you can do the same with honestly anything else, any other business, any other make money online space you're in, potentially even your job. Like, there's a million things you can use this formula for to go ahead and make money. But I'm going to relate it back to trading just because that's how I made a lot of my money. And show you how to make it go from there. So, what is a machine? In simple terms, okay, I like to draw as an M with a box in it. It's basically you put something in and you get something out. All right, I'm going diagonal here, so bear with me. But let's say you put in $1, and let's say you get $2 out, okay? Now, that is a machine that I'm sure everybody would like to have, right, where I put $1 in, I get $2 out. Now, the question then becomes, what is in this machine that turns it from $1 to $2? How do I get this machine? And if this does actually work, can I just keep putting more money into it and have this cycle of putting $1 in, getting $2 out, and just going back and forth like that? And the answer is yes. So that is the actual formula. Like, that's what you need to do if you want to actually make a lot of money. All right, I'm going to break down kind of the machine, how it all works, so you can do it the same way. All right, so examples of certain machines, right? So for me, obviously my entire background is in trading. All right, trading stocks, trading options, all of that good stuff. So here's how trading works for me, right? Now, it's a little bit different to the average other business or other, different examples. But for me, let's say I have 20K account, right? And let's say every single week I put 20K in and I get, we'll call it 21,000 out. Make sure you guys can see that. Yeah. So 20K in, 21K out, right? That's, I don't know what that'd be, 5% a week. Again, just an example. This is not myself at all. This is an example, right? So this is a machine where if you have $20,000, you can make $1,000 a week. You're going to want to put more money into the machine. And then you get 21K out, and you put 21K in, then you get like 21.2K in, 21.1, I don't know what it is. And you keep repeating the cycle back and forth, so you end up making money. Here's where a lot of you guys mess up. Here's why you're not at the point you want to be in, okay? Your machine is broken, and that's fine, right? My machine was broken for a while too. But you put $1 in, right? It's a terrible looking dollar. And then you may only get, 50 cents out. And so this is a machine where over time you are actually losing money, which for part of the process of actually getting rich and making a lot of money, you kind of need to go through that point in time where you have this machine here and it's not making you any money to figure out how to get a machine that actually is making you money, where you put some in and you get more out, right? This is the only way and the fastest way to multiply your money. It's not going to be through anything else other than this. So there's two main issues that a lot of people have that are stopping them from actually becoming successful. Okay, two issues. Spelling is terrible. Don't worry about it. Now, the first one is, but there's essentially two ways to grow and two things that they're not doing, right? So the first way to grow is going to be optimize machine. Oops. Okay. So they need to optimize the machine that they currently have. Okay. Now the other one is look for other machines. Again, spelling is terrible. But you guys get the gist, right? You can either look for machines that work, or you can optimize the one that you currently have. Now, most of you guys watching this probably do not have a machine, right? Where you put money in and you get money out, right? So what you need to do, if you want to actually make money and leverage and make a lot of money and multiply it very fast, you need to have a machine, right? So for mine, it was trading. With trading specifically, right, what you need in trading is a strategy, right? It's very common practice. And again, this can be applied to literally anything, right? What you need is a strategy. Now, if you have a strategy where you put $1 in and you get 90 cents out, that is a losing strategy, okay? So when you get to this point, which I would say almost all of you are at, there's two things you can do. You can A, look for another machine, okay? So you can look for another machine, or you can optimize your current one, right? So you can try and change it, you can try and tweak it. So when you put $1 in, you actually get $1 and we'll call it 5 cents out, right? That's profitable, that's making money. Maybe it's not a lot, but you can scale it and you guys get the gist, right? So what we need to do is figure out A, do you want to find a new one? Or B, optimize the current one you have, right? And I'm going to help you decipher that, right? Now, again, when it comes to trading specifically, there's a lot of other factors, right? You have things like risk management, right? You have things like psychology, okay? These are other factors where it doesn't even matter if you have a good strategy. If you don't have these two, the machine is still going to be broken, right? So the machine in general, just to give you some context here, trading-wise, is compromised with 3 things, right? Psychology, risk management, and strategy, okay? This is it. These are the only 3 things that compromise or make up the machine. So all you need to do is optimize this system, your psychology, your risk management, your strategy, so where you put $1 in, you get more than $1. More than $1. I don't know if you guys can see that. Just like that. That's all you need to do. That should be your number one focus. That should be your number one priority. That is how I was able to make a ton of money, because I spent 2.5 years building this machine. All right? And now I've just been rinsing and repeating this machine over the past 2 years. And that's how I've been able to multiply money very fast. And that's how I plan on making millions in the next few years. All right? So it's really simple. Now, the biggest thing that I see is some people, don't know what is actually causing them to fail, right? Whether it's psychology, whether it's risk management, whether it's strategy. It's actually easier to fix than you think, okay? So just to give you a quick breakdown, you may have a machine or a strategy per se where you put $1 in, in the machine, right? And you get, we'll call it, $2 out, right? That's a really good machine. You basically double your money every time, right? This could be in a month cycle, this could be in a weekly cycle, it could be in a quarterly cycle, right? It could be in a bunch of different cycles. But you basically do this, and it's just this pattern. Now, how do we know whether it's actually risk management? How do we know whether it's psychology? How do we know whether it's strategy? So I'm going to break it down. So let's start with psychology, okay? PSY, psychology. Here's where things get interesting. So you may have things like this, okay? You may have FOMO. You may have greed. You may be desperate just in your life. And because you're desperate, you start to get greed. You start to get FOMO. You start to try and make money really quickly, right, instead of doing it the proper way. Maybe you're in a signals chat, right, and you're just taking signals and you're losing money that way, and you're getting emotional because you're missing all the moves. All of these are psychological errors, right? You can also add in not getting out at stop loss, right? All of these things are psychological errors. Now, if you have a machine, again, when I say machine, just think strategy this time, okay? Actually, I'm just going to redo it. If you have a strategy, right, where if you put $1 in and you get $1.05 out, that is profitable. That is making money. Think of a casino, okay? This is kind of how a casino works, okay? Over the long haul, right? This is not like every single slot machine, every single blackjack hand, right? We're talking over the long haul. Casinos, the more people come in, the more money they spend at the casino, the more money they make. And so their goal is just to get as many people inside and spend as much money, so this flywheel keeps on happening, okay? Just like that. So do you think casino owners get any of these emotions? Do they have FOMO? Are they like searching for other casinos to open? Okay, aside from quote unquote expanding the business, no, right? Are they getting greedy, right? Are they trying to rig the slot machines where they're winning 90, or where they're winning like 99% of the times? No, I think they win like 55 or 60% of the times. Something very small, right? Are they getting desperate? No, right? They're just trying to get as many people in. Are they not getting out their stop loss, right? In trading terms, it means, are they changing the rules, right? A lot of casino owners have rules in terms of max bet, right? If somebody wins the jackpot and they win $1 million, the casino owner is not going to freak out, okay? They're actually going to be happy because it's going to be good marketing. It's going to get more people in. It's going to keep the flywheel going. But they just keep making more and more money. So the same exact thing should be in terms of your trading, right? If you have a strategy that works, like a casino, you don't get any of these. None of this happens. And it took me a really long time to figure this out, a very long time, like 5 years. Because when you have a strategy that works, all of a sudden something clicks. And it does take a little bit. It takes a few weeks, right? Not forever, but it takes a few weeks. When you get 4 to 5 weeks under your belt of, we'll call it consistent profits, okay? That's really all it takes, 4 to 5 weeks of consistent profits. What happens is your brain starts to love, at the heart, the strategy, okay? Making sure you guys can still see this. So your brain starts to love the strategy. When your brain starts to love a strategy, you get something called confidence, okay? Now, when you have confidence, you don't get these things, okay? So next time you're in a trade, price is going up, right? You buy right there, and it starts coming down. Your target was up here, didn't quite hit your target. It's coming down to your stop loss, right? All these emotionals that would happen to you, all these emotions, getting FOMO, greed, maybe you want to move your stop a little bit lower. Maybe you want to give it more room. Maybe you want to double down, add in size here, right? All those happen start to disappear. Because you have 4 to 5 weeks, I'll draw it down here. You have 4 to 5 weeks of consistent income. And when you have 4 to 5 weeks of consistent income, you start to act like a casino. You could start to think, okay, I have confidence in this. My strategy works. I'm going to take this loss. I don't care if it hits. I don't care if I win. I do not care what happens, because no matter what happens in this trade, there's always going to be the next day, right? There's always going to be a calendar with multiple days on it. And if you have a losing day today, losing day the next day, it does not bother you. It does not bother me, because you know most days you will be green. And that's exactly what you need to do with your trading specifically, okay? So it's actually different, right? If you have a strategy that works, you're not going to have psychology. Your psychology will just be gone. That is it. That is something I can tell you, like, for sure. Psychology is a myth if you have your proven strategy. A lot of you guys don't have that strategy. A lot of you guys don't have 4 to 5 weeks of consistent profits. You guys don't have that consistent income. You have no confidence, which leads to all these issues. All right? So that's the first thing. You need to get a strategy that works. Now, you may be asking, cool, great, understand that. How do I now get a strategy that actually works? That's a really good question, right? So there's 2 routes, 2 options, okay? This goes back to kind of what I was talking about when it comes to, actually being able to, A, optimize, or B, find something else, right? So the first thing is, this is what I did, okay, option 1, backtest/create. Okay, you can basically build and create your own strategy from scratch, right? Now, what I did to create my own strategy is something like this. I started with a main concept. Okay, so we'll have a main concept, main C, and then we also have confluences. Okay, main concept and then confluence. This is like strategy building 101. This is like literally the gold of how to do option 1 of getting rich. Okay, so main concepts, confluences. Your main concepts. For me, I use supply and demand. Okay, you could do something like support resistance. You could do something like ICT stuff. You could do something like moving averages, or I don't know. There's a million different things, right? Then you have confluences. These are things that support your setup. If you guys remember like 3rd grade or like high school, like writing classes, what do you do if you're debating someone, right? You have your main argument, then you have supporting arguments. Okay, and your supporting arguments defend your main argument. Same thing with trading. It's cool how everything aligns, right? So your supporting arguments could be things like trend. It could be things like volume. It could be things like divergences, right? It could be things like moving averages. It could be like another main concept of somebody else. And so when you have a bunch of these things that line up, that support your main concept, which for this example, we'll call supply demand, you now have a strategy. That's step 1. Now, step 2 is testing. Okay, this is where a lot of work and action comes into play. You need to test, so you know that it works in your head first. You can do it forward testing, you can do it paper trading, back testing. Any of those will work, but you need to, first, make sure it works, right? So to do that, you have risk reward, and then you have win rate, all right? I'm going deep. I hope you guys are taking notes. Like, there's like 10 different steps here. But we have risk reward, and then we have win rate. These are the 2 metrics that determine if something is profitable. You guys can't see it because of my screen, but profitable, right? That's it. Now, it doesn't matter if your risk reward is 10 to 1 and your win rate is 20%. Doesn't matter if your win rate is 80%, your risk reward is 0.5 to 1. What matters is that it's profitable. That is it. Everyone who tells you you need at least 2R, you go for 3R trades, stupid. Okay, I go for 1 to 1.5, and it works for me. I have about a 65, can't see it. I have about a 65% win rate. Okay, 64, 65. That's an average for myself plus my students, with about 1 to 1.5 risk reward. Okay, it's not incredible. It's not 2R, 3R every trade, but it's profitable. That's what we're shooting for. We're shooting for profitable. Okay, it's actually better edge than casinos, to be honest. Now, so we go with that. We test. We have our main concepts. We have our supporting confluences. We build a strategy. We test it over a lot of trades. For me, it took me like a year to actually figure this out. And what's probably going to happen is the first time you go through this, it actually won't be profitable. Profitable. All right, it actually won't be profitable. And what you need to do from there is what a lot of people do is they get shiny object syndrome. They go and that's when they go into a Discord signal. That's where they go and look for something else. No, what you do is actually optimize. Okay, optimize, optimize, optimize. Because you've done the work, you've done that, you now have something that, although isn't profitable, is getting there. And so what you do is you look at your numbers, so you look at your risk reward, you look at your win percentage, and you tweak. Okay, maybe you change your supporting arguments. Maybe you end up changing your entire main argument or your main concepts, right? You change your confluences, right? You change something, you take something out, and you add something in. You change one stuff at a time. This is like back and forth, like experimentation, right? It's a lot of work, but that's what you got to do if you want to make money. All right, that's what I did for 2.5 years. So you experiment, and you can, again, two things. You can either take out or you can put something in. Put in. You're going to take something out of your strategy, like take one of these out, or you can add something to it. Take out and add. You're constantly doing that to seeing what works and what doesn't work. And then boom, after months and months and months of doing this, you should end up with a strategy that's profitable. Okay, then you trade it live. Trade it live. Then you get, like I said, 4 to 5 weeks of consistent profits under your belt. Small size, nothing crazy. Again, this is a process, guys. We're not looking to get rich quick. Process. 4 to 5 weeks. Then slowly scale. Slowly scale once it's working. Okay, I'm on this step. And technically, this is a step that goes on forever. And then ultimately, as time goes on, then you can start leveraging other opportunities. All right. But the goal for now is to get into a point where you start small, consistently profitable, then slowly scale from there. Now, option 2, remember that was option 1, is create yourself. Option 2, this is what I wish I did. Learn from someone else. I'm just going to learn someone else. Okay. Learn from someone else. Really simple. Now, what you can do at this point is say, hey, there's someone else out there who knows a strategy, who's put in the work. They know it works. I'm just going to use theirs. All right, and you can use mine. You can use people on the internet. I'm not here to pitch you guys. I'm just here to show you guys another option you can go. Okay, so you can do this. You can get mentors. Do it however you want. But if you learn from someone else, typically quicker, typically more accurate, as long as the person you're learning it from, you can trust them, and then, it's typically faster. There's a little bit of a learning curve, so it will take a little bit longer than 4 to 5 weeks using this method, anywhere from like 6 to 8 weeks, just a little bit longer, just because it takes a little bit more trust to build confidence in that strategy, okay? That's pretty much it. So I know we covered a lot, but real quick, and we got a lot more to go, but we have strategy. So we have 2 different methods. Called DIY, do it yourself, or learn from someone else, LFSE, okay? You get a strategy, do it for, let's call it 6 weeks, okay? Learn it for 6 weeks, and then you profit. Again, at this point, you have what? You have a machine or a strategy where over time, you put money in, you get money out. That's it. Okay, and we'll call this X, we'll call this Y. X is greater than Y. Simple formula. This is like the formula to make money in any niche, any trading thing, any leverage, doesn't even matter. This is it. That's all you have to do. That is it, like nothing else. Now, going back to trading, going back to outside factors. Some of you guys in other businesses or whatever it is may not have money in the first place. That could be a causing factor. Some of you guys may not be in a position to even I don't know, you don't have money, you don't have anything else. That's fine, right? Now, if we go back to trading for a second, I'm going to tie everything back at the end. The last piece of the puzzle is risk management. So remember, the three things. You have risk management, you have psychology, and you have strategy. That's it. Three things. If you fix these, you will make money for the rest of your life, and you'll never look back. Risk management. The most important, probably the most crucial part, right? Now, the thing with risk management is actually really simple. It's a lot easier than you think. A lot of times where people mess up is they get psychology mistakes, which causes bad risk management. Okay, so they risk more than they should, and they know that because they don't have a strategy in place. So you fix this, and it will ultimately help risk management a little bit, but they'll show some actionable things you can do to fix your risk management right away. Right? So here's what we want to do. First thing, calculator. Actually, let me screw that up. We're gonna save that for last. First thing you want to do is know your numbers. Know your numbers. KYK. All right. Whoa. KYN. Know your numbers. So here's what you need to do. If you know, let's say you have a 10K account. All right. $10,000 account. Beautiful. 10K. How much should you be risking per trade? The thing that's important is that the dollar risk should be constant. Dollar risk should be constant, okay? Which means I have $10,000 in my account. I'm just going to throw a random number out there. $100 is how much I should lose on every trade. Every trade, okay? Now, if I am trading and all of a sudden I have a loss that is more than $100, I know some people on their trading journals will have a loss that has more than one R, right? This is your R value, right? R is just risk. So you're risking $100 in each trade. Sometimes it'll be down like 1.5 R, 1.2 R. That is bonkers. That makes absolutely no sense, okay? The whole point of R, the whole point of risk is that is your risk. If you're ever down more than one R, you are doing something completely wrong, all right? So it should be $100 risk. So every single trade that goes by, you should not lose more than $100. Now, let's say we're on a chart, and let's say we're trading options, okay? And so we get in here, and we're target's all the way up here, and our stop loss is down here. What you need to do is figure out your dollar amount risk first, okay? Then decide which option you want to get. Then decide the amount of contracts you want to get, okay? So we start with dollar. Then we start with option. Then we go into number of contracts. All right, so let me give you an example. This trade here, all right? We know we want to risk $100. Boom, we got it figured out. How do we know we want to risk $100? That's 1% of the account. That's always a good standard. 1 to 2%, always good. Now, options. Which one do we want to take? Well, that also dives into your strategy. Okay, so that should really be part of your strategy. Is which options you want to be taking. All right, let's just say we go in the money. We go 2 weeks out just to be safe. All right, this is a day trade. In the money, 2 weeks out. Cool. Now we pull up the chart and we look at the option chart itself, and then we say, okay, let's say they're sitting at like $3. All right, let's say right here, this is at $3. Okay, let's say this is at like $4. This is at like $2.50 or whatever. All right. We line this up with the chart, and we say, okay, on the chart, if I'm looking at the chart real quick, so let's do this. So let's say this is the stock chart. Let's say this is the option chart, okay? So the stock chart with the option chart. You can see how they look the same. Typically in the money 2 weeks out, it's going to look the same, all right? And we get in here. We know our stop loss is here. We know this is here. We basically line it up, okay? So we line it up, and we say, okay, I know my stop loss are going to be here on the stock chart, which means that lines up to about here on the option chart, which is about 250. Okay, so now we know that we're risking 50 cents per contract, which is going to be $50 per one contract. So remember, 100 shares, or 100 contract is 100 shares of obligation, right? So if we want to risk $100, we're risking 50 cents, which is actually $50 per contract. We take 2 contracts. Okay, and what that's going to do is that's going to say, okay, we get in 2 contracts here. If price hits our stop on the chart, that's going to be around here, which is going to be right around here, which is going to be right around 250, which means we're going to lose right around $100. That is how you calculate risk, my friends. That is how you get good risk management. That is how you fix your trading so you can make a lot of money. All right? Simple steps. Start with the money you want to risk, then you go to the option you want to take, then you figure out the amount of contracts. Okay? The worst thing you can do is say, I don't want to risk more than 10% on an option. I don't want to risk more than 20%. Okay? You can say I went from $3 to $2.50. There's no different than me getting 3 weeks out and getting in at $3 and having the risk be at $2.75, and I just get more contracts because I'm risking only $25, so I get 4 contracts. Do you guys get where I'm going with this? Does this make sense? Simple math, right? All you have to do is figure out your risk, your tolerance, and you do that. Now, once you get this working, okay, and you have a machine where, for this example, we're risking $100. Let's say we make 2R a week. Okay, so we make $200 a week on a 10K account, all right? Just like this. Over time, this is how you scale. This is actually how you scale, because you don't want to do it too fast, because, like, yes, you may have a machine where, you put 10K in, and then every week you get 10,200 out, and that is a profitable machine. And of course, you would think in your head you want to just dump as much money as you can and keep this cycle going, which in theory you do. But if you do it too fast, then psychological issues come back, because there is if we're looking at a psychological scale here, there is a time where money, I call it money relativeness, or money relativity, sorry, is basically how much money is worth a lot to you, right? If, for me, if I'm risking $50,000, what am I doing? $50,000 in one trade, that is a lot of money to me. It doesn't matter how much I believe in my strategy. That is like, I'm going to be emotional on that. It does not matter. Now, hopefully down the line, right, my money relativity number keeps going up. But you guys get the gist, right? So what you have to do is figure out how much you can lose without actually being emotional on that, right? For some people, it's going to be literally $5, right? They may say to yourself, hey, if I lose $10, that's a lot of money for me. I'm going to get emotional with that. For some people, it's like $1,000, okay? Where they can risk $1,000, or you can risk $1,000, and you don't actually end up it's like, who cares, right? It's like dinner money, right? So what you need to do is figure out your relative number. Use that as your starting point, your base point. You need to slowly scale, increase your account with your profits as your money relativity number, goes up. Does that make sense? So both of these need to be happening at the same time. You need check marks on both of them. Okay? Your perspective and your emotional conscience on money needs to go up as well as your account size, right? You have to obviously be profitable and making consistent profits before you start to scale up. Okay? Really quick story. This was an issue I had last year where I went too quickly with my relativity thing. This was not up to pace yet, and I started risking a lot more than I should have, and that ultimately actually had my account go down a little bit. Okay? I was able to recover because I started back small again. Now at a point I'm getting back up, but I'm taking it. That's why you have to go so slow. Okay, this is why people say all the time, if you can turn $100 into 1,000, in a month, why don't you just turn $100 into, $1 million and just keep going, doubling, 10x in it every single month for like 20 years? And it's not really how it works, right? Because of this money relativity. You need to actually understand how much money is relative to you and how much you can afford to lose without actually getting emotional behind it. All right. So that's it. It's really simple. Now, once you have all three of these things, you should have it all down. You should have risk management / scaling, right? You have your psychology fixed because of your strategy. Just like that. And then there you go. You are now a profitable trader when all this is fixed. And then as you go over time, what you need to do is less of, I'm just going to go EE, less of everything else. Like, that's it. You need to be hyper-focused, hyper-lasered on your system, on your machine, on your strategy. Do absolutely nothing else. Okay? That's what I've been doing. That's why I've been using the same strategy to trade for the past, 2.5, 3 years. Right? That's it. I have not traded anything else. I don't trade ICT. I don't trade using moving averages. I don't trade any other strategy but my own because it works, and there's no reason for me to ever trade anything else. It's really, really simple. So when you can get this and you can get a machine, finally actually makes you money, what you can do is just keep dumping, keep scaling, keep growing, And eventually, you can start to use this and leverage it with more machines, all right? So you can get machine 1, you get machine 2, you get machine 3. But all of this right here is not necessary, okay? What you need is one, just one. And then when you have millions, then you can go into step 2, which is this, which is what I'll be doing in the next few years, okay? All of this is part of the plan, but guys, I'm telling you, this is all I've done, okay? I don't like the word secret. There's no secret to getting rich other than just having a machine that works. And everyone who's gotten rich, at least like not like getting lucky, who's been doing it in a way that's strategic, has been through this. They've got some type of machine, some type of lever, some type of function where when they put money in, they get more money out. And they just repeat the process, and then over time, they optimize the machine as well. That's the thing with my trading, right? If I put $1 in, I get $2 out. What I also am doing in the back end is working on this machine and trying to make it better. So where I can put $1 in, I can get $3 out, right? These are all just hyper examples, but you guys get the gist. The goal at the end of the day is to find one machine and just optimize, 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 and do absolutely nothing else. Then ultimately after that, once you have a lot more, leverage into multiple machines, and then become rich and grow all of your money, right? Now, one of the machines that a lot of people use is long-term investing, LTI, long-term investing, right? Or putting money in your IRAs, right? There's nothing wrong with that. Absolutely nothing wrong with that, right? You put money in the stock market, you put $10 in. Over time, it's obviously going to grow, right? As long as you hold for enough time to actually see it play out and you don't get caught in a bear market and sell, right? But over 5, 10-year, 20, 50, 30-year period, that money's going to grow. The only issue is not an issue, but it's not quick, right? It's not a fast multiplier, right? You have to put $100 in, and you get $110 out every year, okay? So it's still a machine that works, but it's relatively slow. If you're looking to make money quicker, all you need is a machine that's a little bit faster than this. And when you have that, you can eventually scale and grow and make a lot more money a lot more quickly, right? And that's the same path I'm on now. So that's pretty much it. That's how I was able to make a lot of money. That's how I plan on going to make a lot more money. Just continue growing, building, and scaling my machines, and then eventually finding more machines and just dumping more money into it. As simple as that. So I hope this video helped. I hope it broke down some of the issues you're having. I basically just told you guys how to actually make money, how to get rich. If you did enjoy, subscribe. Okay, please subscribe. Leave a like, comment other videos you think I should make. And yeah, see you guys in the next video.